In this video, we will discuss different candlestick patterns which can be very useful for both expert advisor and manual trading. Stick around to the end to receive a free trial of our golden missile system, which uses impulse candles to scalp gold. So, just to kick us off here, I have found through my trading journeys that candlestick patterns are one of the best tools to build mechanical trading systems. Frankly, they are as close to raw price action as you can possibly get, and because of that, they don't tend to have the same lagging nature that indicators do. You can also often combine them with pending orders and very tight trailing stop losses to develop extremely good scalping systems. However, not all candlestick patterns are created equally. I have found that you really need to have a strong premise behind them for them to be valid. There are thousands of candlestick patterns, and some of them are just trying to make patterns out of randomness. But I find if you can have a really strong, logical reasoning as to why a candlestick pattern should work, then it can be very, very powerful and a useful tool for your trading arsenal. So I'll kick us off here with some examples of candlestick patterns, which I find are very useful and which you may want to explore further. My absolute favorite candlestick pattern is a one candle impulse candle. So very specifically, it's just a massive candle relative to the candle surrounding it. And you can define massive in quite a few different ways. You can look at it relative to the ATR, you can have an absolute value, so the candle is greater than $3 or $4, etc. But this just means that you have a huge candle. And why is this powerful? Frankly, if there's a massive candle that occurs, likely something is happening in the market. So the most obvious example would be on a news day, like the candle which occurs immediately preceding the CPI or the NFP news release is enormous relative to the prior candles. And this is because there's clearly a fundamental event happening in the market. And that is an extreme example, but you could also simply have a massive buy or sell position which is being liquidated midday, and you see this enormous drop. It happened a few months ago in gold as China announced that they would halt buying gold reserves, and there was this immediate massive spike downwards. And ultimately, it's a technical sign, but it's very often driven by either strong fundamentals or by a clear imbalance in the market. So the reason why this is my favorite candlestick pattern is because it clearly has an incredibly strong premise behind it, with that if there's a massive candle which occurs in your chart, something is happening and there's an inefficiency currently taking place in the market, and there must be some way to capitalize on it. So would highly explore looking at impulse candles for your own trading. Moving on, we can now move to the doji star. So this is almost the complete opposite to the impulse candle, where instead of looking for a massive candle, we're looking for an ultra small candle. And I like to use doji stars perhaps differently than quite a few conventional technical analysts would. Ultimately, the doji star is a reversal pattern. You're going to see a large red candle down, followed by a doji, which is defined as the open and the close being effectively the same or very close together. And then that is followed by a green candle up. This is the case of a bullish doji. It's the opposite for a bearish doji. And people use this as a reversal pattern. But I would be rather apprehensive to use this to find the perfect turnaround point of the market. Yes, I'm sure it would work occasionally, but this premise, in my opinion, is the strongest when combined with trend filters. So how I like to use a doji star is, let's say for instance we are in a bullish uptrend. You could use EMAs or an ADX or a slope indicator to tell you that you are indeed trending upwards. And then you would look for when in an uptrend sellers tried to regain control of price. They tried to push it back down, but they simply were not strong enough to fight the trend. So dojis are used to show, hey, is the trend maybe coming to an end? But nope, it's clearly not, as buyers regained control and they pushed it back up. So this is a strong premise for trading because it shows that, hey, we are riding the trend and the trend is continuing because despite pressure from sellers trying to reverse it, it didn't work. So the trend still has momentum in it. Therefore, I have found this to be a rather strong candlestick pattern to use. We can now move to the three-line strike. And the three-line strike I have found to be, it's almost like a mini impulse, because a three-line strike can be defined as you have three candles in one direction, followed by a large candle which engulfs the three prior. So the close of the large candle is above the open of the first candle. And this is just another way of quantifying an impulse candle, because instead of using an ATR or using a fixed point percentage, you're defining big candle as engulfing the three prior. So the three-line strike pattern can be used effectively to detect impulses in the market relative to its prior range. And because of that, it follows and it has a similar premise to the impulse candle, but I have found it's not quite as good. So good, but not quite as good as the prior one. And now we can look at the three white soldiers and three black crows. So three white soldiers would simply be three green candles following each other. And then there's different ways to define this pattern. Some people will look at they're making consistently higher highs, they're making higher lows, and the closes are higher. I've also seen people often say that the gap between the closes or the gap between the highs has to be increasing because it shows that we are having a continuous momentum in the market. But ultimately, this shows that we are clearly trending, we are clearly moving in one direction, be it bullish or bearish, and it does provide a good opportunity to ride the wave. So that was the summary of what I have found to be the strongest candlestick patterns for algorithmic trading and I suppose for trading in general. Because ultimately there are thousands and thousands of candlestick patterns, many of which are just pure noise. However, I would really encourage you to always think premise first. Why does this make sense? And then go and look for candlestick patterns which match your logical reasoning. I would also encourage you to read the following two books, Japanese Candlestick Charting Techniques by Steve Nyssen and the Encyclopedia of Candlestick Charts by Thomas Bukowski. Steve Nyssen is the gentleman who brought candlestick patterns to the US and to the Western market, so this is really a classic piece of technical analysis literature. Encyclopedia of Candlestick Charts goes through pretty much every single candlestick chart that you could possibly think of, so it's quite helpful as it just helps to provide an exhaustive list of ideas to test out. So would highly recommend this for your own trading journey. And now to wrap us up, I would just draw your attention here to our WAP page at Prosperity Algo Solutions, and currently we are offering our Golden Missile Expert Advisor with a free 7-day trial. You can see here Golden Missile with a 1-year backtest has approximately a 100% rate of return, and this has been matching live trading as well. So would highly recommend you guys check it out, back test it, and see if it works in your strategy. And this would enable you to test the impulse candle threshold automatically using systematic back tests. Like, subscribe, and let me know how you found this video. Take care. Have a great day.